Hello guys, I'm Paris, the Options Guy, and welcome to the No BS Trading Podcast. This is episode number 10 of the podcast, and I hope you guys are doing very well. But yes, we are already at episode number 10, and thank you very much for watching until now. But what can we expect from next week? Because we have a lot of things that are going to come in the next week, and by a lot of things, I mean only one thing, and that is the union budget. Because on Tuesday we have the union budget, and I'm going to tell you what you can exactly expect from the union budget, what are the market expectations, and how can the market react to the union budget, and where can the market move after that. But before that, we also had the Reliance and HDFC Bank results that came out over the weekend. So we are also going to talk about how the results of those companies can affect the market on the Monday's opening. So yeah, stay tuned till the end because this is going to be a very informative episode and a very helpful episode for you. But yes, without any further delay, let's just start with the episode. Now, in the previous week, we didn't really have a lot of things that happened except for the two biggest companies of our Indian stock market releasing their results. And both of those results came after market, after the Friday's closing. So both of these results have not been discounted as of now by the market. But I'm going to tell you what exactly those results were, starting off with Reliance Industries, which saw a decline of 4% in its net profit on a year-on-year basis. And the revenues went up by 12% on a year-on-year basis. Right now, one thing that to keep in mind in the Reliance Industries results is that the O2C business, the oil to chemical business, which is sort of their legacy business, the first business or the main business, which also contributes to a lot of their revenues, it saw a little bit of weakness due to the oil prices. And on the other hand, the new age businesses, which were the consumer businesses, Reliance Jio and all of those stuff, they sort of were performing better. And so those new age businesses sort of compensated for the weakness that we saw in the oil to chemical business. Now, some people are saying that the results are good and some people are saying that the results are bad. But if you see the Reliance GDR, basically you can say Reliance's shares, which are sort of listed outside of India in different other markets, so they were down 4%. Now Reliance was down 4% on Friday itself. It closed actually not 4%. Reliance was down 2% on Friday at Friday's closing. So that means the GDR went down 2% more, right? So it looks like Reliance is opening with a gap down as per GDR. Now, what is more important is that what happens after we open the gap down, because what happens a lot of times is that we will open with a 1.5%, 2% gap down, but all of a sudden in a single candle at the opening itself, you will see a very big green candle, which takes the stock up to maybe, basically the stock goes flat after opening down 2%. So what is important is the price action that follows after opening. If we are seeing more selling after the opening, then that is a problem. But the results are pretty stable. They are not bad as of with what I can see in the results. They are not really that bad. They are fine, not really very great also, but they are fine. So let's see how the market reacts to these results, because what the other thing is that HDFC Bank's results have come out, and net profit was down 2% quarter on quarter. Revenue was up 6.6% quarter on quarter. And you would say this is a very bad result for HDFC Bank, right? No growth at all. Net profit is down. But you have to understand that these results have mostly been factored just a few days ago when HDFC Bank released its business update, basically Q1 business update. And at that time, if you would have seen, HDFC Bank fell a lot in just one single day, and that was because the market was expecting these types of results to come, right? So what you need to understand for HDFC Bank is that these results have already been factored in. So what can happen in HDFC Bank's case is that maybe even HDFC Bank opens, let's say 2% down or 3% down, you could see a very good recovery in HDFC Bank, because what will happen is that a lot of people will think that these results are bad. The common people will think that these results are bad, and they will start selling the stock. And what the people who've already taken positions from higher levels, who shorted HDFC Bank on the day when the bad business Q1 update came out, maybe I think 2 weeks ago was that, right? So 2 weeks ago, the people who would have shorted, now they are looking at a very good profit. Now they will get an exit if the stock opens, let's say, even 1% down, right? So what will happen most probably is that even if you open down or even if you open flat, we might see a little bit of weakness in the start. That is fine, but we could see a very good recovery from lower levels because the results have already been factored in, and a lot of big institutions or big traders or big prop firms who've taken short positions from higher levels will see this as a chance to exit and not make more short positions, because these results have already been factored in. And as I've said in, I think in the previous few podcasts, I think in the start, that the first few quarters after the HDFC merger, the HDFC and HDFC Bank merger will be pretty bad, and that is fine, right? Now, what we can expect going forward is that we might see a little bit of, again, a pickup in both revenue, net profit, and all of those things. So I think the spillover effect from basically the market is getting disappointed that even after the merger, we are not seeing such good numbers coming from HDFC and HDFC Bank. And that's why we are seeing, the stock getting hammered every time it goes at higher levels, and every time the results are not that great. Even the previous quarter, if you see, the results weren't great, right? So that is why I think the market, I think, now has discounted all of that, and I think now we can see a good pickup in the numbers and in the growth of HDFC Bank in the coming quarters. So keep that in mind. I think the spillover effects, the bad effects have already been are already out of the stock, and now we can see a bit of good results coming in the coming quarters, at least stable results coming in the coming quarters, and not the results which are showing a decline in the profit or in the stocks, basically in the growth of the stock. And again, if you see, these results are also pretty stable compared to the Q1 business update that we got a couple of weeks ago. These results are also pretty stable. So both of these companies have posted pretty stable results. Now what you need to keep in mind is that how does the market react, because many times a company will post good results also, and even then it will go down. So very important is that in the next couple of days, how does the market react to these results, because that will be very, very important to watch out for. So this is what the results, this is what happened in the previous week that went by. Nothing really more than that happening, not a lot of big things happening aside from this. So now let's move on to what is going to happen in the next week, because we have the union budget next week. So let's talk about that. Now, next week before the union budget, we do not have anything that we need to look forward to. So let's just jump on to the union budget and what are the expectations. So this time, the union budget can focus a bit more on welfare spending rather than the capex. So if you see in the previous few years, if you see, the government has been pushing capital expenditure a lot, making investing a lot in infrastructure and all those things, which are going to give it a bit of a long-term effect or a long-term benefit. So I think this time around, the government has a bit less of that, you can say, like, there is not a lot of scope to be investing in capex as of now. Sure, there is definitely still pretty much a good amount of scope, but still I think this time we might see a bit more focus on welfare spending as compared to capex, because you have to understand that this time around, the Modi government is not as powerful as it was in the previous budget, right? So a lot of new people or representatives who come into the Lok Sabha, or who are going to recommend for changes in the budget, they will vote, or not vote, but they will vouch more for welfare spending rather than capex. So this time around, as I said, we can see a bit more you can say push towards welfare spending as compared to capex. So keep that in mind. After that is that I think this time we can see very big decisions coming in the budget for the very long run also, 20, 25 years, maybe even 10 years forward. But yes, in the near term also we could see pretty big decisions coming from the government, because you have to understand that now the government that has been made is going to stay for the next 5 years. So they are going to take big decisions, at least, which is going to affect their tenure for the next 5 years, right? So big decisions can also come in our way. That means big volatility can also come in our way, or maybe not even big volatility, but a big trend can also come in our way. Keep that in mind, because if you see in 2023 there wasn't really a lot of, sorry, not in 2023, but in February this year there wasn't a lot of momentum in the market, because again that budget was pretty much like a short term budget for just a few months. But in 2023, if you see, we saw very big moves in the market, where the market moved 3-4% easily up and down. So we can again see those types of move pretty easily, because this time again we can see very big decisions coming from our budget. And after that, if you see, we can see a bit of more push towards job creation and subsidies for housing, because now this is something that is sort of not, doesn't have a good reason. But again, more than the reason, if you see, it looks like the government might focus more on subsidies for housing for poor people, or some people who have lower income, who cannot afford a house of, let's say, 30-40 lakhs. So these people might get subsidies to buy a house. And then there could be also job creation. Now job creation could be in labor intensive sectors, where you require a lot of labor, and other many things, like, you know, things which need sort of export sectors or export goods, right? These sectors could see a lot of job creation push coming from the government. So again, some same thing, like similar to welfare spending only, the government is acting for the welfare of the people if it is creating jobs. So that is something. Now after that, what we can see is that and which is a good thing, is that RBI had transferred in May, like what is it, 2 months ago, RBI had transferred a massive dividend to the government, which was much higher than the expectations. I think 20-30,000 crores higher than the expectation, if I'm not wrong, but I might be wrong in that. I do not have the numbers as of now, because I didn't write them, but still, they had transferred a massive dividend in terms of thousands of crores, right? More than expectations. So now what can happen is that this extra revenue that the government has got, now this can be used to do two things: either focus on welfare spending, as I said, or focus on capex. Now welfare spending, how can they focus on the welfare spending? Is very simple. Either they could reduce the tax, maybe they could give us some sort of tax cuts, right? Maybe reduce the GST, or if not GST, maybe reduce the personal income tax rate that is going on for whatever, right? For whatever is going on right now, maybe they could reduce it a few percentage points, or maybe they could increase the limit for tax rates to be applied, or they could also spend it on transfer spending, basically giving some sort of benefit, you can say direct transfer of money to people who don't have a lot of income, to lower income people, right? So other thing is that they could boost the capex, maybe invest more in infrastructure projects, maybe invest more in railways, right? So both of these things are good for the economy. So if we get any sort of a news which is something which is related to this, I think we can see a very good move on the upside on the budget day also, and we can see a good move coming in our markets for at least the short term, because these things which are going to be announced in the budget, they can really have a very good effect. So our markets can continue to rally for a few days after the budget also, but that is something that I'm going to talk about in the market analysis part of this episode, and what you can expect from the budget and how can the market move after the budget. So keep that in mind. But yes, those are the expectations for the budget. Now let's talk about what after that, right? So on Thursday we have the US GDP data. Expectations are that the GDP will come out at 1.9%. Last time the GDP came out at 1.4%. So keep that in mind. People are expecting the US GDP to now again expand and grow faster. So if that doesn't come out as expected, we can see more weakness in the US markets, because if you see, US markets saw a good amount of weakness in the second half of the week of this week. So after that, we have the PCE price index. Now, PCE price index is similar to inflation, not completely similar to inflation or the CPI data. So if you see, the CPI data came out came out good for the markets. CPI was down pretty good. It looks like the CPI is again continuing to move downwards and getting closer to 2%. So keep an eye on PCE price index and core PCE price index, because if these guys are not moving down, then maybe chances are that CPI also might not continue to move down in the coming months. So expectations are that PCE price index on a month over month basis will rise by 0.1% and core PCE price index will rise by 0.2%. So these are the things that you need to keep in mind for the next week. Aside from this, we do not really have anything which is noteworthy, or you have to keep an eye out on it. So yes, now let's move on to what are the IPOs coming in our markets in the next week. Now, talking about the IPOs that we have next week, we have only one IPO, and that is Sanstar Limited. So this company is a company which makes products out of maize, right? So you can think about, let's say, starch, right? Different types of starch, glucose, and all those stuff. So we'll not go into the technicalities too much, but yes, this is basically a company which makes maize-based products. So this IPO is a 510 crore rupees IPO, out of which 397 crores are of fresh issue. That means they will go to the company, and 113 crores will go to the promoters or people who are selling their already existing shares of the company to the public. So it is fine. A good amount of money is going into the company. So let's first talk about, from the listing gains perspective, how is the IPO looking, because a lot of people are investing just for the listing gains. So just based solely on the listing gains, the listing gains are now indicating 30 to 35%. So from the listing gains perspective, it is not that great. However, it is not very, very bad also. So if you are, if you can risk, if you want to risk your money, if you are fine with taking a bit of high risk, then you can think about applying in this IPO if the listing gain stays about 35% by the end date of the IPO, which is July 23rd. So the IPO is going to close on July 23rd. So if by then the listing gains stay about 35%, you can think about applying in this IPO. However, I would recommend that at least let the listing gains go above 45%, the gray market premium go above 45%, then it is a better option to apply in this IPO. So if you cannot take a lot of risk and you want a higher certainty of making a profit, then just skip this IPO until and unless the listing gains go above 45%. However, if you can take a good amount of risk and you are ready to take a good amount of risk and a little bit of loss also, just in case if that happens, then you can think about applying in this IPO if the listing gains stay about 35% by the end date, which is July 23rd. So from the listing gains perspective, it is not that great as of now, but not very bad also. So that is fine. Now, one thing to keep in mind is that the subscription data, basically the demand for this IPO is pretty high, because it got subscribed very, very fast, and as of now also it has already been subscribed 4.2 times. So a good subscription sort of demand is telling you that the IPO may also list higher than the gray market, what the gray market premium is suggesting. Just keep that in mind as a point to consider when you are investing in the IPO. So out of the way, how is it on a fundamental basis. Should you apply in this IPO for investment purpose, for a long-term purpose? So for that, if we go down and look at first of all how the revenues, how the net profit and all of those things have grown. If you see, revenue was just 504 crores in 2022 FY22, and in FY24 it has gone up till 1081 crores. But yes, one thing to keep in mind is that in FY23 the revenues were actually 1200 crores. So a bit of dip in the revenues in this FY in the previous FY, which was FY24, but still a very good strong growth in the revenues of the company. And the better thing is that the profit after tax has increased at a much faster pace, because in FY22 the profit after tax was 15.9 crores, in FY23 it was 41.8 crores, and in FY24 we are looking at 66.7 crores. So a very good profit after tax increment, which shows that the company's efficiency is increasing pretty well. So now, one thing to keep in mind over here is that the company has 127 crores of borrowings, which is not a lot. It is pretty fine, right? So one thing to keep in mind is that the proceeds of this IPO, the 397 crores which are going to go into the company, a part of that will be used to repay this 127 crore debt. And if they repay, let's say, even 50 to 40 crores, this can aid the bottom line, that is the profit after tax, pretty well. So profit after tax can also continue to increase in the future with same growth or maybe a little bit less growth, but still a very good growth, right? On the other hand, if you see, return on equity is 30.9%, very good number on that basis also, and return on capital employed is 24.4%, very good number. Now the only thing that to keep in mind is that the IPO has been priced a little bit on the pricey side. So if we see, the PE is of 26 plus, but in the industry, if you look, the PE is on bit of a higher side. However, I think they are asking for such a high PE because of the growth also that they are commanding. So if you want to invest in this IPO, it is a good IPO. However, it is a bit priced. So if you can get this IPO, let's say at a lower level, now the shares are going to be issued at rupees, just give me a second, yes, at rupees 95. So if you can get these shares near 85 rupees or 80 rupees, that will be a very good deal. That will be a very good investment option. And one more thing to keep in mind, which is a bit of a cautionary thing, is that 35% of the revenues of the company as of FY24 is coming from exports, right? So if the government decides to ban exports on all of these maize-based products, then the company could be very adversely affected. Keep that in mind, right? But however, we don't really know if the company will do so or not. If the government will do so or not. But that is the risk that you need to keep in mind if you are investing in a company which has a higher good amount of share of revenues which are coming from exports. So from a fundamental basis, it is a good company. But the best thing would be if you can get shares of these companies near 85 to 80 rupees. Just an amazing deal. But still, you can also apply in this IPO on an investment basis. I'm just saying that at that level of 80 to 85 rupees, these are an amazing investment buy. But still, at 95 rupees, the company is investable and you can invest for the long run in this company. So that is the review of Sanstar IPO. From an investment basis, you can apply definitely, but don't go completely overboard. Keep it at a moderate part of your overall portfolio, or give it only a moderate percentage or weightage of your overall portfolio. Please do not go overboard with this company. If you get the shares at lower price, then you can think about giving it more weightage in your portfolio. But at 95 rupees, at the IPO price, giving it a very high weightage in your portfolio can be a bit of a bummer for you in the coming few months, you can say. Or let's say if the market starts to correct, then the stock can also correct pretty good. And so If you get at lower levels, then you can think about increasing, giving it very good weightage in your portfolio. But at higher levels, do not think about going very aggressive in buying into the shares of the company. So I hope that is very clear, and I hope you guys have a clear idea of how Sanstar Sanstar Limited company is and should you apply in its IPO. Now let's move on to the market analysis for next week. Now, talking about the market analysis for the next week, we have the budget coming up. So keep in mind that do not go very aggressive and trade very aggressively on the budget, because budget day is a very volatile day mostly. So do not go and trade very aggressively on the budget day first of all. But now let's move on to the weekly charts. If you see Nifty making a inverted hammer at the top, not a good sign for the bulls, but we are going to talk about how big of a bad sign is this. So talking about that, before that, if you see bank nifty pretty much staying flat for this week, and in the daily charts if you see, bank nifty has been consolidating in this range for a long while now. And by a long while I mean since 5th July. So it's been 15 days or 2 weeks since bank nifty is just consolidating, and it also hasn't been a good time for me because I am a directional trader, and I tried to take a few trades over here at the lower levels over here, thinking that bank nifty might break this level and go till at least 51,200, 300. But again, I got my stop loss got hit, and at many other places also. So talking about nifty hasn't made a very good candle in the week in the daily charts either. This is a bearish engulfing candle, and this does not look that good. However, until what point does this not look good? Does this mean that the trend has reversed, now we are going to go down, or does this mean that this is just a pullback? So before talking about all of this, I'm going to first talk about what you can expect from the budget day. Now in the previous years, if you see, there has been a lot of volatility in the budget day, and what happens usually is that if in the first half of the budget day we start to move, in the second half of the day we see a very good sell off. So if you guys are planning to trade on the budget, which I would recommend please do not do, but if you still want to trade, what you can do is take less quantity and go against the trend. What do I mean by against the trend is that, let's say in the first half we move up, right, and in the second half you see a lot of weakness in the market, then you can think about taking a selling position in the market also, but keep your quantity less. And again, same thing on the downside also. If we continue to move down, let's say in the first half, and in the second half if you see any sort of recovery being made in the market and you are seeing very strong buying coming from lower levels, then you can think about buying also from the lower levels. But one thing to keep in mind now is that for bank nifty, now two major important levels are 52,800 and 51,800. Any of these levels if broken, we will see a very fast move either on the downside or on the upside, right? Easily on the upside you can expect 54,000 very easily, and this will be a very fast move, keep that in mind. Even 55,000, maybe 55,000 might take a little bit of time, but 54,000 can come very fast on the upside. And on the downside, 50,000 to 50,000, you can say 500 can also come pretty fast. So two major levels, 52,800 and 51,800. Now keep in mind that these levels, if they are broken after the budget day, that will be amazing, and wherever these levels are broken, we will see a very big move on either side. Keep that in mind. And for nifty, if you see, the major level that needs to be watched out for is 24,200. What for nifty might happen is that nifty might come down a little bit till 24,200, because in the weekly charts also if you see, the candle that has been made over here doesn't really indicate that nifty might continue to move. It might continue to move because again we have the budget is an extraordinary event. If we get something very good which is very good for the economy, market might react very strongly to it, and so we can also expect 25,000, 25,500. That is also fine. But just based on technical terms, if we are staying below 24,500, then we can expect more correction in nifty at least till 24,200 first of all, and then 24,000. That is an easy thing. And then at lower levels we might again see market taking support and then starting to move up. So major levels for nifty is 24,500. The longer we sustain below 24,500 and start making negative price action, we will get more weaker, nifty will get more weaker, and it will see more correction first of all till 24,200, and then if 24,200 is broken, then 24,000. As of now it is nothing to like worry about very much, but yes, keep in mind that nifty might maybe start to go into a bit of a consolidation over here. And so for bank nifty, it looks like if you want to catch a trend, bank nifty will be the best thing for you. And one thing that can happen over here is that, or one thing that you should keep in mind is that if let's say on the budget day the market breaks on the upside or on the downside, do not assume that the market trend will go in that way. What happens many times is that on the budget day, the trend that the market takes on the budget day, on the next day the market can again reverse the trend. So after the budget day, wherever we are going, that is the trend that you need to follow. On the budget day, let's say we move down, maybe open with a gap up, whatever, then come back down, move close near 50 and 500, 50 and 1000, all these levels. What happens after the budget day is more important, because a lot of people, they start to again sort of square off their positions after the budget day, and you will see again market moving, reversing back. And on the upside also same thing, maybe on the budget day we come back till 53, 500, 200, all these levels, and then again we go back down. So what happens after the budget day is more important than what happens on the budget day, and that will decide the trend. So if on the budget day, let's say we are seeing this breakout above 52,800 and market also closes above that level, if the market again after that, after the budget day, comes back down and closes below 52,800, then you can also take it as a breakout failure and trade a short trade on the short side over here. So keep that in mind. Talking about nifty, as I said, 24,500 will be the important level, and then 24,200 and 24,000 will be the supports that need to be watched out for. If 24,000 is broken, then there is a bit of a worry for nifty, but until then this might just be a consolidation or a pullback, and then nifty might continue to move up over here. So yeah guys, that was it for the market analysis for the next week. Now let's move on to the concept that we are going to learn today. Now talking about the concept that we're going to learn, and the concept that we're going to learn today is known as market structure. And this is an important concept if you're a trader and you take trades which are sort of trending or also non-directional trades. So what market structure allows you to do is understand when the market is going to trend, and when the market is going to be volatile, and when the market is going to be sideways. So what market structure is that this is the sort of pattern that the market follows when it is moving in a direction. So what market structure is very simple. Market first of all will trend in one side, and then it will go into a volatile phase, and then it will go into a consolidation phase. So this is market structure. And if you see in any sort of stock, in any sort of index, wherever you see, you will see market structure being followed most of the times. And this is, as I said, that first of all the market, just give me a second, yes, first of all the market will trend in a single direction, then there will be a lot of volatility, and then there will be consolidation phase, right? So these are the phases or the market structure that the market follows. So does the market structure work is very simple. Whenever somebody first let's talk about consolidation. When nobody is taking a lot of positions over here, but when somebody starts to take position, a lot of people come and start to take position with alongside. Let's say we break out from here, so the consolidation phase will end and a lot of people will start buying, because of which you will see a trend in the market. After that we have the volatile phase. Now what the volatile phase is that a lot of people will start to square off their positions. However, at the same time, a lot of people will still continue to buy, thinking that the trend will continue, because of which there is a volatility and there is a lot of battle between the buyers and the sellers, right? Because of which you'll see spikes or moves like this over here, right? So After that, we have the consolidation phase, where again the market starts to stabilize and people start to sort of take less positions. And once again, when there is a breakout, then we again start to see a trend in a single direction. So this is the market phase, and you should always keep in mind in a market phase or market structure, and you should always keep in mind at what phase is the market in right now, so that you can understand when the trend will come, when the trend will continue, when there will be volatility in the market, and when there will be consolidation in the market. So as of now, if you see, there is consolidation. So now we can expect a trend in either on the upside or on the downside, because now the consolidation is over. Now there will be trend, and there will be a trending phase in the market, and then again volatility, and the cycle continues. So this is what is known as market structure, and I hope you guys understand what it is. And yeah, guys, that was it for this week. And thank you very much for watching till the end. I hope you guys took away a lot of information and a lot of insights from this episode. And I hope you guys had a great time listening to this episode. But yeah, if you feel that there is any sort of a problem with the podcast, or with how the podcast is done, or if you want anything, something added into the podcast or something changed, do let me know in the comments, and I'll try my best to sort of make those changes. So yeah, that was it for today, and thank you very much for watching till the end. I'll see you guys in the next episode. Bye bye.